Good morning, ladies and gentlemen. Welcome to Market Forecast, brought to you by Options University. This is Butch Shorak. It's Monday, February 10th, 2014. Access to this video is for informational and educational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. And let's see what happened during the last week, as we had been somewhat into a downtrend as we looked at our last meeting. And looking at this week, looking at the Dow, NASDAQ, S&P 500, Russell 2000, we see that we have positive numbers in everything except for the Russell, which was down slightly for the week. Percentage changes for the week are up 0.6% for the Dow, up 0.5% for the NASDAQ. Leading the way up was the S&P 500, up 0.8%, and the Russell down 1.3%. Year to date, we certainly have negative numbers as we're looking around 5% out of the Dow down, NASDAQ down 1.2, S&P down 2.8, and the Russell down 2,000. And what we're hearing about is we're hearing from the bobbleheads that there is a big pullback taking place in the market. Is that really true? Well, let's take a look and see what economic announcements are coming this week, as last week we made it through the Fed, and after the Fed, things kind of turned around. Let's look at this current week, what we're looking for economic announcements. And as we see, not too much going on Monday. Construction spending coming out at 10 o'clock, and of course the two big ones are ISM coming out at 10 and PMI coming out at 8:58. Looking at Tuesday, a day that shows us little or nothing, factory orders at 10, not a big mover for the market. Looking at Wednesday, we see ISM non-manufacturing index coming out at 10, giving us last month's numbers. And then finally we go to Thursday. Every single Thursday, of course, we see our jobless claims coming out at 8:30 and productivity costs coming out at the same time. Nothing much else happening the rest of the day on Thursday. And then Friday, we look at last month's employment situation, see what the employment numbers were for the month. That could certainly move the market. And that is the economic announcements for the coming week. Remember, news overpowers everything. Next, looking at the SPX. Let's take a look at that SPX and see what it did during the past week. Looking at a 3-month chart on the SPX, we see that we basically ended up with a big pullback on Monday, didn't hit the 200-day moving average, and then just worked our way back up, headed for an area of resistance, which we see right here. And so that area of resistance currently at, the real question is, are we going to break our way through that? We still have the 30 above the 50, which is above the 200, showing us that the bull market is still intact. And you say, is it really intact? Well, let's take a look at the next chart and see what that looks like. Looking at the SPX again, on the next chart, we see that there's a little closer pull up. Looking at Monday, down trend. Looking at Tuesday, Wednesday, Thursday, and Friday, we bottomed out and found some support finally at that level. And now we're headed back, sitting at resistance, and this is the week where we head back towards some of those previous highs. Would be a good thing to look for at this particular point. Is that bull market still intact? Well, we'll talk about that in the gold section of the market forecast. Looking at the Dow, well, we look at the Dow and it basically looks the same. We had quite a downtrend out of the Dow. It was the big pullback out of the group, and it showed real weakness coming into the month of February. And now, as we see, we're headed back up, still underneath that 16,000 range, but certainly room enough to head back up towards that 16.5 if we truly are still in that bull market. And again, we'll talk about that in the gold section. Looking at the NASDAQ, showed a little more strength. We're certainly sitting at resistance again right here, and we see we're headed back up again. Are we going to reach those those all-time highs that we had just one short month ago? In fact, it wasn't even a whole month ago. And we see the NASDAQ heading back up towards those numbers. Russell 2000, which was down for the week, kind of interesting, and we'll see exactly what that looks like, as we have had a good deal of support there, and then Friday it just took a dive, and then we are headed back up. Again, this gives us many times a sneak peek. Is there early weakness showing in the market? What kind of expectations can we expect out of 2014? And we talked about that in some of our previous meetings. The January barometer basically hasn't showed us what we wanted for the bulls as far as where we're going. Looking at the VIX, we've certainly had some volatility that entered the market as we had that big pullback. Went back up to that same level. We're looking at a 9-month chart here, and you see that we got up to the previous high, and then it just kept coming down as the market began its rally in the last 3-4 days. So we see we're down about 15. We'll see if we continue on down. One might expect that we'll continue on down, and then we'll if the market keeps going up, we'll see this come back into its trading range between 12 and 15, which is where the VIX spends the majority of its time. All right, let's take a look at some of the sectors other than the indexes that we look at. The first one we'll look at will be the bonds. And looking at TLT, our ETF for bonds, our 20-year Treasury bonds, we see that as the markets began to become a little bit afraid, there was a move back up into bonds, and we see that we went up and tried to and did close that previous gap that took place back here in June. So that gap is closed now, and the bond market, if the rally continues, should continue to pull down and come down with lower lows and lower highs, as the bond market isn't going to rally in these low interest times. All right, then let's take how much fear was actually in the market. Looking at gold, we saw that we had a little bit of a rise out of gold. We're still down 25% from its previous highs. So no big real fear as there was this flight to safety in gold. Next, let's take a look at the Spider and see what kind of volume we had during this week. Notice our big volume day was right here. And it was on Friday when we had that big pullback, and then we had pretty good, decent volume as we began our climb back up. Certainly higher than average volume as we looked at these last 4 days. Interesting, if we take a look at this, notice what happens as we look at the Spider. It certainly is in a nice uptrend looking at that 30-day moving average. A little bit of a rollover here. We've seen that before. Will that continue? We had a little bit of a rollover back there as we pulled below that 30-day moving average. We'll see whether we head towards those previous highs. If the overall market pulls back, what do we expect the financials to do? Well, that's exactly what they did. We saw the financials pull back and basically mimic the S&P. And that's one of those Dow theories where the financials follow the S&P. And so with that, let's take a look. Was there this? Did we get a big rally out of oil? Well, we had a nice little move out of oil as we saw oil headed towards this previous resistance. Look at this crucial point here at about 36. See whether it continues on up or whether that acts as resistance, and then we start pulling down. You might have a potential short or bearish trade on oil if the market keeps going up. So with that thought, those of you that are gold members, stick around. We'll go to our stocks to watch, see what they did during this a little rally that we had as we had our pullback, which is what healthy markets do. They do pull back. And so with that thought, for the gold members, stick around. And for the rest of you, this is Butch Shorak. It's Options University. It's Monday, February 10th, 2014. And this is Market Forecast. For those of you that would like to watch some free videos, go back and look at Options University, www.optionsuniversity.com/free gold. Thank you for watching us, and we'll talk to you next Monday.